This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil settled higher on Friday, notching a second straight week of gains on easing U.S.-China trade tensions, although prices were held back by expectations of higher supply from Iran and OPEC+. Brent crude futures settled up 88 cents, or 1.4%, at $65.41 per barrel, while U.S. West Texas Intermediate crude futures closed 87 cents, or 1.4% higher at $62.49. The contracts fell by more than 2% in the previous session on the prospect of an Iranian nuclear deal, which could result in an easing of sanctions that could see Iranian crude return to the global market.
Woodside Energy's decision last month to proceed with its Louisiana LNG export facility was the first of over 90 million tons of new LNG shipping capacity U.S. companies plan to approve this year despite uncertainty about President Donald Trump's trade war, according to company statements and analysts. The U.S., already the world's largest exporter of the supercritical gas with 91.3 million tons of annual capacity, should triple that before 2030 thanks to projects awaiting final investment decisions. Those come on top of 95.7 MTPA under construction, according to an April note to clients from Poten & Partners. Trump has said he wants to vastly expand U.S. energy production and exports, and his administration has lifted a freeze on new LNG export permits, declaring an energy emergency.
Moving on to the top news in the energy sector.
The United Arab Emirates plans to raise its energy investments in the United States to $440 billion in the next decade, it said on Friday, boosting U.S. President Donald Trump's efforts to secure major business deals on a Gulf tour. The wealthy oil power strategy, which aligns with global growth ambitions for its companies, was announced during a presentation by Abu Dhabi oil giant ADNOC's CEO Sultan Al Jaber to Trump during the last stage of the president's regional trip. The enterprise value of UAE investments in the U.S. energy sector will rise to $440 billion by 2035 from $70 billion now, Al Jaber told Trump, adding that U.S. energy firms will also invest in the UAE.
Discounts for Russian Urals oil cargoes loading in June widened slightly to dated Brent from the levels achieved for May loading volumes on a delivery basis at Indian ports, free traders said on Friday. June Urals cargoes are trading at discounts of $2.70 minus 3.10 a barrel to dated Brent on a day, delivered ex-ship, basis at Indian ports, compared to a $2.50 to 3.00 per barrel range for May cargoes, the traders said. Urals prices are little changed for June barrels or just a bit weaker compared to May volumes, one of the traders said, adding that higher availability of alternatives was starting to weigh on Russian oil differentials. Next, we have the top news in metal markets. Iron ore futures prices slid on Friday on signs of softening near-term demand and growing caution over the resolution of the Sino-US tariff war, although a trade truce between the two countries kept prices on track for a weekly gain. The most traded September iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.95% lower at 728 yuan, $101.11, a metric ton, registering a weekly rise of 4.5%. The benchmark June iron ore on the Singapore Exchange was down 0.83% at $100.35 a ton, as of 07:03 GMT, a gain of 3.5% so far this week.
Copper prices fell for the second session on Friday as softer demand from price-sensitive consumers such as China pushed the growth-dependent metal down from its recent highs sparked by the 90-day U.S.-China trade truce. Benchmark 3-month copper on the London Metal Exchange was down 1.2% at $9,457.50 a metric ton by 16:13 GMT. The metal, used in power and construction, touched $9,664 on Wednesday, its highest since April 2, and is up 4% so far this month.
We will now look at the top news in the agricultural sector.
Chicago wheat futures moved lower on Friday as traders weighed improved yield prospects in the U.S. plains, though brisk export demand limited losses, traders said. Soybean prices steadied after tumbling on Thursday, while corn sank on ideal planting and growing conditions in the U.S. Midwest. CBOT soybeans closed 1.25 cents lower to $10.50 per bushel. Soybeans had reached their highest price since late July on Wednesday, buoyed by this week's de-escalation in the US-China tariff standoff, before dropping 2.5% on Thursday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.